Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the D Street. And yet again, you do have commodity prices coming to the front line. Silver prices have crashed sharply in trade, yet again testing $75 an ounce level as well. So we've been seeing extreme amount of volatility in the bullion prices. We have seen in the early trade that silver prices have tumbled today. Prices have plunged almost 9% on an intraday basis as well, and what we've seen as far as the white metal is concerned, that it has crashed 24,000 rupees per kilogram. Now silver is trading somewhere around 2.44 lakh rupees per kilogram, and we have seen this sharp tumble in trade as far as the bullion prices of silver are concerned. Global silver prices have slipped below $75 an ounce. What is the key reason behind it is something that we will focus on right now, and what you should as an investor be doing. Today on the show we will also be focusing on a lot of brokerage houses reports as far as defense counters are concerned. You saw how HAL tumbled yesterday, and today there is a brokerage house report that actually expects HAL shares to drop down by another 34-35% also. Stay tuned to find out the details of that brokerage report. We will also be focusing on some of the Q3 earnings like Trent and Tata Power for that matter. We will also have an exclusive chat with the top management of Tata Power at 10:15 today. But let's quickly welcome our guest on board. We have Mr. Abhishek Basumallick joining in to share with us his views on the D Street. Warm welcome to you, Abhishek ji. Good to have you with us. Well, straight up first on the silver prices first, the sharp crash, as to how are you looking at it? How should an average investor look at what's happening in gold and silver? This last entire week of February, we've seen so much of volatility in gold and silver prices. First, they crashed for 2 days consecutively, giving us an understanding that the bubble has probably burst and probably gold and silver prices are now correcting to somewhere fair valuations. Yet again, we saw some retracement and gold and silver prices inching up higher again. And today, yet again, there is a crash and silver prices are below $75 an ounce and now trading at 2.44 lakh rupees per kilogram. What should one be doing at this point in time with gold and silver investment?
So, good morning to you and all your viewers. I think last week, Wednesday or Thursday, when I was on your show, I was saying that silver, gold, the moves have been parabolic,
yes,
and it cannot sustain like this. We saw a very sharp fall, and my sense is that the fall is not done as yet. We might see further falls. I am more positive on gold from here on, because gold, there is a lot of central bank buying. There's a lot of fundamental buying as a currency replacement or as a currency hedge. Silver does not have that kind of buying power. So I will be very, very cautious with silver. But gold and silver both may consolidate and fall a little bit further and then consolidate. Gold still is probably a better, if you absolutely have to be in metals, probably gold would be a better choice.
Gold will be a better choice if you still have to be in gold and silver at this point in time, looking to take the benefit of the current crash. But there has to be a lot of caution to be had. This is not the time to be aggressive. There could be some more easing off of the prices, as what Mr. Basumallick has pointed out. Let's talk about the markets now. What do you think is the worry that the markets are facing at this point in time? We thought that the best of, the biggest of the overhangs is now over and out. We've had a US-India deal, we've had the budget uncertainty also go away. At this point in time, there have been not too many negative earnings surprises as well. Then what is it that is keeping the markets away from sustaining an upside?
See, I think first of all, very, very difficult to give a definitive answer to that.
Yeah.
But my sense is that it's a combination of many things. One, the details of the India-US deal is not very clear. We don't know what is actually coming, so there is uncertainty around that. There is some fear that basically coming from the US side or pronouncements from the US side saying that India is going to import agricultural goods. So that's a gray area for now. Addition to that, I think overall there is a risk of sentiment, because people are not very sure what is happening in the US economically, and that is an overhang, because we saw a very sharp cut with the IT, in the last 1 2 days, and overall how it impacts the US markets, and then is there going to be a spillover effect in the global market. So basically a lot of things making it murky. If you see even in India, stock specific moves, wherever results are very good, stocks are moving, holding or moving up. Wherever the results are slightly disappointing, they are literally getting butchered.
Absolutely. We are seeing a reflection of the gold and silver prices crash on MCX shares. The stock has fallen by 8% as well. On the markets, viewers, it's only the IT, PSU banks and FMCG space that's holding with some gains. The rest of the pocket has all slipped. Metals is the top loser among sectors, 2% lower in trade. On the Nifty, you just have about 10-12 stocks that are hovering higher. Many of them are from FMCG space, PSU banking space. You have Trent that's up after the earnings. You have some IT names also after the huge crash that are climbing or crawling back in trade right now, but rest of the pocket seems to be weak at this point as well. Mr. Basumallick, do you think any gold or silver related stock also one should be very cautious with at this point in time? What should one do with an MCX, Hindustan Zinc, Hindustan Copper, or maybe gold financiers? What should one do there?
If you have a longer term view, most of these metals are metals or metal related stocks are very cyclical in nature. So you have to be very careful. When the going is good, these can move up very fast, and when the going is bad, they will move down equally fast. And a lot of times you will get trapped and you will not get an exit. So very difficult call to take. As an investor, one should not be investing in these companies in the first place. You can do that as a trader, you trade in and out of these positions, but for long term investments, these are not the best of bets. If you have holdings in any one of them, and if you have a very clear view of the underlying company, underlying metal, then you might want to hold on, or start selling slowly. But I would always be very skeptical of buying investment positions in these kinds of companies.
Okay. Let me also focus on a bit of the stocks that are in focus because of the results that are coming in and are in focus as well. Let's talk about Trent first. That's the counter that we are looking forward to. Now, we do know that once seen as the biggest wealth creator on the D Street, has been lying low for some time now. Q3 results have impressed with the margins, but the question is, can the stock still deliver on growth going forward from here? The stock is up by about 0.6% post the earnings, as we have seen, but we have seen that this time around margin beat has largely been attributed to operating efficiencies, better sourcing, productivity gains, particularly at Zudio is what we've seen. Many brokerage houses have flagged that the improvement has been structural rather than one-off, aided by automation, tighter cost control, stabilizing of the employee expenses, and that's something that is pushing the margins higher. But where the cautious approach has been within the brokerage calls, Citi continues to maintain a sell rating with a target price of around 4,350, although still higher than what it is trading at right now. It's flagged concerns around margin sustainability as the expansion related costs catch up as well. Jefferies is also staying on the sidelines with a hold rating and pegging the base case valuation of around 4,575, outlining the upside scenario at 6,500 if the growth accelerates materially, and the downside case of 3,500. So let's try and understand with Trent what's happening. Mr. Basumallick.
So I think Trent, had done really well as a business. They've sort of cracked the fast fashion through the Zudio. They brought fast fashion to the country, to tier 2, tier 3, and smaller towns and cities. But I think a large part of the fast move and the quick penetration has been done incrementally. It is going to get slower and slower, because either now you have to go into far-flung areas, or you are going to increase the density of your stores. So it's going to be more incrementally difficult to retain the pace of growth. I think the challenge has been in terms of the earnings, the acceleration of earnings. It's not that it's just the growth. They were at one point in time growing extremely fast, over 100%, and the stock by any method of valuation is not cheap, even at these levels, or even after it has sort of corrected more than 50% from the top. I think it was close to 8,300 at the top, and today it is at 4,000. So even correcting, getting half of the price, the PE continues to be extremely high, and so there is going to be a longer period when earnings needs to catch up and the PE will moderate. So if one is investing for the next 1 to 2 years, maybe Trent is not the best idea.
Right. Mr. Basumallick, let me also shift focus to the defense names, especially HAL that dropped by 8% after having been knocked out of the race for the stealth aircraft manufacturing there. Yesterday it was down by around 7-8%. Today again there's a 6% fall that we are seeing. So together after yesterday and today there's an over 12% kind of a decline that we've actually seen on HAL already, viewers. It slipped below the 4,000 mark also. There is a fresh concern that Morgan Stanley as a brokerage house has downgraded Hindustan Aeronautics to underweight category from its earlier rating of equal weight. They've cut the price target by 34% now to 3,355 rupees. They had an earlier target of over 5,090 rupees also. The revised price target now implies there could be a potential further 20% downside potential to the current price as well. So let's try and understand what really is happening here. Mr. Basumallick, one, how bad is the news for HAL of having been knocked out of that race? And do you think a large part of revenue potential would have only depended on winning this one, or there can be other opportunities that it can cover up its made up loss with? And how would you look at the fresh concerns being raised by brokerage houses here?
See, I think HAL is has been perennially underperforming. I'm not talking about the stock price as a company. I mean, they are unable to deliver what has been ordered to them on time, or with I mean, it's been a case. I don't remember any time when HAL was able to deliver its orders on time. So it's a good welcome step. I think it's very important that companies, management are held accountable, and I hope that this kind of a snub that has been given to them, the management sort of realizes that they need to get their act together, and ultimately it is in the benefit of the country, because they are in a very, very sensitive sector. We need aircrafts, we need helicopters, etc., that HAL produces, and they've actually been doing not a great job. So personally, I think it's been it should act as a wake up call for them, and if they are able to get their act together, the opportunity size is very, very large. There is going to be a short term, medium term hit because of this, because of the news, and but I think it's going to be good, at least for the country, if not for HAL.
Question I'll squeeze in before I let you go, Abhishek ji, and that's on Tata Power. After the earnings have come in, you track the power space very, very closely, and you've been studying this entire space for opportunities. How do you see the Q3 earnings that have come in? A largely mixed set for the results that we have seen. Net profit marginally higher year on year, above street estimates, even as the revenue and EBITDA have declined. How are you looking at the current earnings, as well as what would you want to ask? The management will be joining us shortly. Do you have a question for the management at this stage?
See, I think Tata Power again is a great company. That they are in a transition journey, right? They are they were a legacy thermal power company. Now they are getting very, very heavily into renewables. So it's a company which is in transition, and and they are also in the rooftop solar space. Overall, I think it's a very very good company. The story is multi-year, multi-decade long, and personally, I like the company. Although I don't have any investments as of now, I used to hold it earlier. But this is a company which I personally feel should do quite well over time.
All right. Thank you so much, Mr. Basumallick, for being with us on the show. Shifting focus to Tata Power earnings and management conversation now. Viewers, the company has reported a mixed set of results for the third quarter. The net profit marginally higher year on year and above street estimates, even as revenue and EBITDA have declined compared to the same period last year. The company has posted a net profit of 1194 crores, up from 1187 crore rupees a year ago. Revenue has, however, fallen by 9.4% year on year, coming in at 13,948 crores. We've seen the EBITDA decline by 9% at 3,055 crores. The margins have now stood at 21.9%. So let's speak to the management and welcome Dr. Praveer Sinha, CEO and MD of Tata Power, with us on the program. Warm welcome to you, Dr. Sinha, and thank you so much for taking the time out for this special conversation. I want to begin by understanding from you, how do you assess the Q3 earnings that have come in? You've definitely beat a lot of earnings estimates on the profitability factor, whereas the revenue and the EBITDA that are down by about 9%. What have been the key factors that have dented this time around the revenue growth and the EBITDA growth, sir?
Good morning, Sakshi. Always a pleasure to be on your show.
Thank you, sir.
I think when we look at Tata Power, we need to look at how the core businesses are doing. Our existing generation business, transmission, distribution, and renewables have done exceedingly well. The challenge has been the Mundra plant, which did not operate, and that is why the reduction in revenue that you see, and also the EBITDA impact. What we have otherwise seen is that if Mundra would have operated, it would have been much higher than what we had done last year for the same quarter. But notwithstanding that, I think we have done quite well, though it is a flat PAT. We have been able to maintain it in spite of the losses that we incurred because of non-operation of Mundra. I think the worst is behind us, and hopefully the PPA, once it gets finalized within this month with the Gujarat government and the others, we should be in a position to operate the plant and be back to the higher returns and higher profitability going forward. So I think we need to look at it from a very positive perspective. Especially we've done exceedingly well in our distribution business in Odisha, exceedingly well in our existing rooftop business, as well as manufacturing business. We could implement 1.3 gigawatt of utility scale renewable projects. So I think all the businesses are doing much better than the previous years, and a strong foundation has been laid for the company.
Okay. Sir, let me ask you on the margins at 21.9%. What is your outlook from here on? Do you see that your outperforming segments, like you pointed out, the renewables, the manufacturing, when you scale them up, there are levers for you to improve this going forward by FY27? How do you see the margin outlook?
Absolutely. And if you see, like in rooftop, our margins have improved in last 1 year. Similarly, in our manufacturing, because the manufacturing plant has stabilized and is producing at full capacity, the margins have improved. Our Odisha DISCOMs, where we had initial challenges on billing and collection, has also stabilized, and we have seen not only in 3 months, but over 9-month period also, it has drastically improved. So I think all the good work that has been done in these areas will ensure that the margins improves going forward, and we will see very good performance because many of the newer projects which we have implemented, they will start giving returns in future.
Okay, so you commissioned 919 megawatt of utility scale renewable projects in Q3. So how are you going to be sustaining this pace all through the last quarter as well as in FY27? And what does the project pipeline look like, sir?
So this year in 9 months we've done 2.2 gigawatt, and last quarter it was 919. We expect that with more of land that has been tied up, next year we'll do something like 3 gigawatt of EPC projects, and these will be for our own generation, for our own capacity add. So I think not only we will have the benefit of implementing these projects, but also the returns because of the generation availability that will increase. So I think you will see very good numbers going forward from Tata Power.
Okay. Sir, on manufacturing, you rightly pointed out your EBITDA and profit has more than doubled. The revenues are up 26%. Is this the growth lever that you will bet big on through FY27? And will that lead your growth in the new year as well?
Absolutely right, because now that the plant has stabilized, we do expect that whatever delta improvements that we are doing, both in terms of availability and optimizing the cost, those should start reflecting in the next financial year, and you will see much better performance from the plant going forward.
Okay. Sir, on rooftop solar execution, 1 gigawatt has been hit in the first 9 months. Give us an understanding of where the demand is emerging from. How is it split between commercial, industrial and residential as well? Give us also an understanding of the overall power demand scenario in the country at ground right now, sir.
So under the PM Surya Ghar program, subsidy was provided by central government to 1 crore households, which has now been added by another 50 lakhs, so 1.5 crore households. Only 25 lakh has been completed, and we do expect that this will have huge pace going forward. The supply chain, the channel partner, the implementation partners have been increased right across. So we have seen year after year and quarter after quarter, our ability to execute rooftop solar has improved tremendously, and this will substantially improve in the coming year and also in this quarter. I do expect that the power demand will go up this year. Last year we had a very muted growth in demand because we had a very long monsoon. This year we are already seeing trends of high consumption both in month of December and January, and with the normal heat conditions in the country in this year, we do expect 8 to 9% growth in power, and the peak demand in the range of 270 to 280 gigawatts. So I think there will be substantial demand, and anyone who can generate at full capacity will benefit from the same.
Okay. Sir, when we ask you on the EV space, you now have about 5,700 EV charging points. Give us an understanding of by when do you see meaningfully this business, contributing to profitability from this current stage, and how do you see the outlook here, sir? So,
apart from the 5,600, we have more than 2 lakh home chargers. And I think 90 to 92% of charging takes place at home only, based on the market survey that we made out. So that has increased. We are virtually with all the OEMs, including majorly with Tata Motors, but all the OEMs who are there in the country, we work with them. We also work with companies who are into public transport, whether it is the medium size or even buses. Right from Srinagar to Jammu to Delhi, most of the buses are being catered through our chargers. So I think there is so much more opportunity which is there, and with more and more penetration of electric vehicles, including for public transport, we have now large number of IT companies which are switching over from the ICE engines to electric buses. We will see that a lot of our chargers will get utilized. So I think another 3 years you will see huge traction in the electric vehicle market, and so also the EV charging infrastructure.
Okay. So I also wanted to get an understanding on the DISCOMs. Odisha DISCOM has actually reported a 163% jump in PAT and lower AT and C losses as well. How would you look at this turnaround? Is it sustainable going forward? And how soon do you see this model maybe replicating for other states, including UP that we've been discussing?
So, Odisha has been a great learning place for us, both urban and rural supply, and the turnaround that we have been able to do, and that's why you see the improvement. This will further improve in the coming quarters because many of the things that we have been implementing, the results have started coming in last 3 to 6 months. But to stabilize and get the best, I think it will take another 6 to 9 months. And so you will see very good performance going forward. The Odisha model has been seen by Government of India, and a group of ministers have looked at the opportunity of replicating it in other states, especially states which have huge financial stress. They have identified nearly 10 states who will be considered for this type of reform. There is a certain incentive that has to be provided to them so that they can take care of the large losses that they have. Apart from that, the Electricity Act amendment talks of that there will be parallel licensing wherein you can have more than one supplier of electricity. So I think in next 6 to 9 months, you will see huge amount of changes happening in the power distribution sector, and the distribution reforms in real terms will happen, and we will, of course, be participating in all of them.
All right. Thank you so much, Dr. Sinha, for being with us on the show. I wish you all the very best for the upcoming quarters. It's always a pleasure to have you with us on Business Today Television to seek all these insights. And I hope that we will be getting in touch with you in another quarter very soon. All right, viewers, that was the exclusive conversation with Dr. Praveer Sinha on the power demand, the earnings, as well as outlook on the reforms front and what is in the offing when it comes to the power space. Hopefully, this has given you a lot of understanding. So stay tuned with us. It's also time to wind up what's hot right now. 25,681 is where we are at on the Nifty, 98 points lower. So we have seen a kind of a down day yet again today. Let's see how things pan out. Will we see any pickup take place? Right now you have 4 sectors that are higher: PSU banks, IT, FMCG and media, but rest of them have slipped in trade. So let's keep an eye and find out what happens in the last last about 4 hours, 5 hours of trade. Right now we're in the first 1.5 hours of trade, but let's see in the second half if things improve for the better.
Good morning, ladies and gentlemen. A very warm welcome back on Business Today Television. The flow of quality third quarter